Now, a lot more banks in the country are now set to fully implement a work-from-home policy post-COVID-19 pandemic. That's one of the findings of a new PricewaterhouseCoopers 2020 banking survey report. George Rafe has details.
The survey engaged chief executives, chief finance officers, technology officials, and operational heads through interviews from 16 commercial banks in the country during the lockdown period. According to the survey, most of the banks were planning to fully adopt the strategy because of how their dealings were impacted during the lockdown period. Following this development, majority of the banks were working to invest more technology when it comes to their service delivery channels. Almost 70% of the banks surveyed have even gone ahead to permanently incorporate remote working for their staff based on their roles. Some of the banks were also working to review their fiscal growth strategies in terms of branch opening, as they are now looking at depending heavily on technology when it comes to engaging their customers and the public. PricewaterhouseCoopers in the survey noted that this move by the banks could also impact on tax collections and revenue mobilization for the country. Despite the expected savings and efficiency of this remote working, most of the banks were worried about the impact of this on jobs, as some of them look at the situation where they might have to lay off some of their staff as a result of this development. For instance, 3 out of 5 banking chiefs interviewed were also worried about the increasing cyber attacks due to this remote working. From the PricewaterhouseCoopers flagship banking survey report, most of the banking chiefs were looking at things stabilizing the next 3 years in terms of them recovering fully from the shocks of COVID-19.